Home prices hit a new record high this week. The true effects of rising interest rates won't be felt for several months. So there's so much momentum with home buyers, and we're just now approaching the peak home buying shopping season. So it's totally normal that prices climb weekly, and inventory also climbs in April. We're starting to hear maybe some anecdotes of fewer bidding wars, but because of the time of year, expect that demand will stay healthy for the next few months. Every week, Altos Research tracks every home for sale in the country, all the pricing and supply and demand. We analyze all that data and we make it available to you before you see it in the traditional channels. I'm Mike Simonsen. I'm the CEO of Altos Research. And let's take a look at the data and see the details for the week of April 4th, 2022. So let's start with home prices today. After spending a few weeks clustered around that psychological threshold of $400,000, the median home price this week jumped to $410,000. That's up 2.5% from last week. So steep weekly price increases are perfectly normal for this time of year. You can see the steep upslope in the dark red line each year. So, we're only halfway through the spring buying season. So 430,000 or so should be peak by June. That's also bullish for future transaction prices is the leading indicator here that we call the price of the new listings. So that also jumped this week to $419,000. That's the light red line here. It jumped to it. That's a new record high there as well. So these are the homes that got listed for sale this week. The sellers and the listing agents in aggregate know exactly where to price the house. They know how many bidders are still bidding. They know how many overbids. They know all the closings. So despite the anecdotes that we're maybe hearing about fewer bidding wars happening as mortgage rates spike, the evidence is that buyers are buying and the sellers know it still. So at some point in the next few months, this will change and we'll see the inflection point in the price of the new listings first. You can see the inflection point in that light red line happens first, and then about a month later, the full active market, the dark red line, turns. And then a month after that, the pendings turn, and a month after that, the closings, the transactions finally complete, and you'll see the price changes in the traditional sales data. So these are your leading indicators for future home prices. And as of right now, buyers are undeterred from the higher mortgage rates as of right now. One thing that's been on my mind lately is that the pandemic recession, which was so steep and so severe for people losing their jobs, it resulted in only 3 weeks of home price declines. You can see the little dip here in 2020 in the dark red line. Buyers jumped in very quickly and started buying well before any stimulus hit. So millions of Americans bought their jobs, but millions more decided it was a good time to buy, despite all the economic fears of the time, which were huge. So that is actually bullish in a coming slowdown. Now, because the mortgage forbearance process, those policies were in place, so even the most distressed home owners didn't have to sell, so that averted the crisis. It worked remarkably well, but it kept supplies super low. So if we roll into the next recession, like next year, we won't have forbearance, and that implies greater inventory will finally become available. But because we have the last recession implied still a ton of demand, maybe we have a slightly more inventory, and that pulls us out of recession more quickly. That's a scenario to keep in mind, that there was plenty of demand even through the deepest of the uncertainty last time. Inventory is in a slightly more normal pattern than last year. So available inventory of unsold single-family homes ticked up to 255,000 this week. Inventory has definitely turned the corner, And inventory usually starts climbing in like early February, but last year it wasn't until the end of April. So this year, the low point was in March, and so we're on a much more normal curve. Expect inventory to climb through the end of June at least, maybe into July or August. By the way, next week, April 14th, Thursday, we have our hour-long April webinar where we will revisit the inventory forecast for the year to look at the latest scenarios that rising rates might trigger and what we know so far this year. These webinars have been terrific. So if you are into all the data, we spend the better part of an hour digging in. Plus, we will look at some of the different local markets and how they fared in 2018, the last time those rates rose. Some markets are much more sensitive to rate changes than others. So we'll check that out next Thursday, April 14th at 10 a.m. Pacific. There's a link to register for the webinar in the description below. Here's another look at supply and demand that you may find useful. So we know that inventory is low, partly because demand has been so high. Americans have been buying everything in sight. This is a view of the total active listings, the total inventory, and the total that are in pending contract. The light red line is the bars are the actives. The dark red bars here are the pendings. So you can see that we now have almost 70% more homes pending contract, sitting in contract, not yet closed, than there are actively for sale. There's way more actually in contract. That's highly unusual, of course. And so I'd expect this to compress and hopefully invert as the market cools. We get more inventory and slowly return to a more historically normal balance. It's something we can keep an eye on as the year goes on. Here's the immediate sales tracker for the week. These are the homes that got listed for sale. They took offers essentially immediately and went into contract. The 25,000 immediate sales this week. Still over 30% of the listings around the country are going into contract immediately. This is slightly fewer than last week. One downtick is still too early to call a trend, but keep your eye on the light red portion of the bars here. If this starts to compress as a proportion of the overall new listings, that's the market telling us that demand has backed off. The fewer bidding wars, inventory building, longer time on market. As of right now, the immediate sales is consistent with the other data, which shows that there's plenty of pent-up buyer demand despite rapidly rising mortgage rates. So any demand decline from more expensive payments is still out in the future. But if you're a seller, you can see why it might be best to list now rather than delay while demand is still hot. So the other demand indicator we're watching very closely each week is the price reductions. So at 17.1%, there are slightly more homes taking a price cut now than last year, and a slight uptick from last week for the first increase of the spring. So last year, the frenzy was still building until early April, or actually until late April. You can see that the normal years, price reductions start creeping up in the second quarter. And so each line here is a year. The dark blue line is 2018. That's when the market slowed due to rising mortgage rates. In November of 2018, the 30-year rate was at 4.9%. And so price reductions hit their highest point in this 7-year span. Normally, about a third of homes take a price cut before they sell. We're at only 17% right now, just slightly more than last year, but still near the record low. I'd expect we'll get over 30% in the latter half of the year. I've said recently that when we go from like 5 bidders on a home to 2 or even 1, like that's going to feel a bit scary. Like, oh my God, the market's crashing. I expect we'll feel that this fall too. Even if the market isn't crashing, it feels dramatically different. Some sellers will get caught off guard. Okay, that's all the data we have time for this week. As you can see, the higher rates have not deterred any buyers yet. So all that market slowdown is likely to be out in the future. But we do have reference points to study to know what to expect for later this year. So stay tuned to the YouTube channel, the Altos YouTube channel, for the latest each week. And we'll keep watching for those signals. We report them here before you can see them any of the traditional channels. As a result, though, as always, this market's nuts. And your clients are probably scared and they need to know what's going on. So to get your Altos data to them right now, go to altosresearch.com, book time with our team to get a local consult on your local data. Next week, April 14th, is our hour-long webinar where we dive into all the details. There's a link in the description below to register for that. These are widely attended, so book your spot to make sure that you know everything that's happening right now. All right, everybody, that's all for this week. Thank you. More next week.